On March 15th, 2023, a solar panel manufacturer in Germany placed an order for 3 tons of industrial-grade silver. Nothing unusual. They'd been doing this monthly for 5 years. But this time, their supplier said something that sent shockwaves through the company. "We can't fulfill your order. We don't have it. Nobody has it." Within 48 hours, this manufacturer had contacted 17 different suppliers across 4 continents. The answer was the same everywhere. Silver wasn't just expensive, it was unavailable. Production lines worth millions sat idle because of a metal most people think is collecting dust in vaults somewhere. This wasn't a random supply hiccup. This was the beginning of a crisis that's been building for decades, hidden in plain sight while the world sleeps. Right now, while you're watching this video, industries across the globe are quietly panicking because the silver they absolutely need to function is disappearing faster than it can be replaced. And yet, if you turn on financial news, if you read investment reports, nobody's talking about it. The hidden silver shortage is the most important commodity story nobody's telling you about. And it's about to change everything. I hope you're doing well. If you like my video, please subscribe to my channel and hit the bell icon for more video notifications. Because what I'm going to reveal will completely transform how you see the economy, technology, and your own financial future. Let's start with a number that should terrify anyone paying attention. The world is consuming more silver than it is producing, and has been for years. We're running a deficit of roughly 200 million ounces annually. Think about that. Every single year, we're consuming 200 million more ounces than miners pull from the ground. Where's that silver coming from? Stockpiles, reserves, investment holdings being liquidated, government supplies built up over decades, and those stockpiles are evaporating. The US government once held billions of ounces of silver. Today, that's gone, completely depleted. China was a major silver exporter for years. Now they're a net importer, buying up every ounce they can find. India, traditionally a massive source of silver supply through recycling and scrap, is now hoarding instead of selling. The entire dynamic has flipped, and most investors have no idea. Here's what makes this shortage different from other commodity shortages. Oil runs low, they drill more. Copper gets tight, they open new mines. Lumber gets expensive, they plant more trees. But silver? 70% of all silver production is a byproduct of mining other metals like zinc, lead, copper, and gold. This means you cannot just respond to high silver prices by mining more silver. If copper demand is soft, copper mines slow down, and silver supply drops regardless of silver prices. The supply is structurally inelastic. It doesn't respond to market signals the way other commodities do. This creates a situation where rising demand meets fixed supply, and the only variable that can adjust is price. Violent, explosive price increases become inevitable. The industrial demand story is even more alarming than most people realize. Every electric vehicle requires between half a kilogram to 1 full kilogram of silver. Mercedes, BMW, Tesla, Ford, every manufacturer racing to electrify their fleets needs silver, lots of it. Global EV production is projected to hit 30 million vehicles annually by 2030. That is potentially 30 million kilograms of silver, or roughly 1 billion ounces per year, just from one industry. One industry consuming half of total annual global silver production. Now add solar panels. Each solar panel installation uses approximately 20 grams of silver. The world is installing solar at a record pace. China alone installed over 200 gigawatts of solar capacity recently, and they're accelerating. Europe is desperate to reduce energy dependence. The United States has committed hundreds of billions to renewable energy. Every single solar panel requires silver for conductivity, and there's no substitute that works as efficiently. Scientists have tried. They've tested copper, aluminum, various alloys. Nothing conducts electricity like silver at the scale and efficiency required for these applications. 5G infrastructure adds another massive layer of demand. Every 5G cell tower, every base station, every connected device uses silver components. As the world builds out 5G networks and eventually 6G, the demand for silver multiplies exponentially. Then there's medical applications. Silver has natural antibacterial properties. It's used in wound dressings, medical devices, hospital surfaces, water purification systems. As healthcare advances and populations age, medical silver demand grows steadily. Electronics represent the foundation of silver demand. Your phone, your computer, your car's computer systems, your appliances, everything contains silver. As the Internet of Things expands, as smart homes become standard, as artificial intelligence requires more computing infrastructure, silver demand from electronics continues climbing. Every single one of these industries is growing. None of them are shrinking. None of them have found viable substitutes for silver. And together, they're creating demand that far exceeds what the mining industry can possibly supply. Now let's talk about what's happening in the physical silver market that should have alarm bells ringing everywhere. Premiums on physical silver have exploded. Normally, when you buy physical silver, you might pay $1 or $2 per ounce over the spot price. Recently, premiums have been $5, $6, $7 or more. Why? Because there's a massive disconnect between paper silver, traded on exchanges, and physical silver that actually exists in bars and coins. You can buy paper silver all day long. Futures, contracts, ETFs, certificates, all kinds of financial instruments that claim to represent silver, but try to take delivery of large quantities of physical metal, and suddenly you discover the truth. Wait times extend for weeks or months. Premiums skyrocket. Dealers simply don't have inventory. The COMEX, the major commodities exchange where silver futures trade, has seen its registered silver inventories, the silver actually available for delivery, drop to levels that are alarmingly low relative to the open interest in contracts. This sets up a potential squeeze scenario where, if even a small percentage of contract holders demand physical delivery, the system could break. Mints around the world are rationing silver. The U.S. Mint has repeatedly suspended sales of silver eagles due to supply constraints. The Royal Canadian Mint has faced similar issues. These are government institutions, struggling to source enough silver to meet public demand. If government mints can't get silver, what does that tell you about the real supply situation? The mining side of the equation offers no relief. Silver production has been essentially flat for years. New discoveries of major silver deposits are rare. The easy silver has been mined. What remains requires deeper drilling, more complex extraction, and higher costs. Many silver mines are old, nearing end of life. Building new mines takes 5 to 10 years minimum from discovery through permitting to production. Even if companies started massive new silver mining projects today, those wouldn't produce meaningful silver until the 2030s. Meanwhile, demand is accelerating now. The gap between supply and demand widens every quarter, and there's no cavalry coming to save the situation. Recycling cannot fill the gap either. Unlike gold, which gets recycled at high rates because it mostly sits in jewelry and bars, silver gets consumed. It's used in tiny amounts across millions of products. Recovering silver from a cell phone is technically possible, but economically challenging. The silver in a solar panel is embedded in the panel for 25 years before recycling becomes viable. Industrial silver consumption means that silver is dispersed across the economy in ways that make recovery difficult and expensive. Recycling provides maybe 15 to 20% of total silver supply. That helps, but it's nowhere near enough to offset the deficit. Here's something that should make every investor pay attention. Major financial institutions are waking up to this shortage. Banks that previously dismissed silver as a volatile secondary metal are now publishing research about supply deficits and structural shortages. Hedge funds are accumulating physical silver positions. Smart money isn't just buying paper silver. They're taking delivery, storing metal in private vaults, removing supply from the market. When sophisticated institutional investors start hoarding a physical commodity, they know something. They've done the math. They see the same deficit numbers, the same demand growth, the same supply constraints, and they're positioning ahead of the crowd. The geopolitical dimension makes this shortage even more critical. Silver isn't just an investment or an industrial metal. It's a strategic resource. Countries that control silver supply have leverage over industries critical to modern economies. China understands this perfectly. They've been accumulating silver for years while simultaneously dominating the processing and refining of silver globally. If trade tensions escalate, if supply chains fracture further, access to silver becomes a national security issue. The United States and Europe are suddenly realizing they've become dependent on foreign supply chains for a metal absolutely essential. The Perth Mint scandal revealed just how fragile the system is. One of the world's most respected mints faced allegations of supply issues and delays that sparked panic among investors. If a government-backed institution with centuries of credibility can face supply constraints, what does that tell you about smaller dealers, private vaults, and ETFs claiming to have metal? It tells you that trust in paper claims to silver is eroding, and when trust erodes, people demand physical possession. That demand for physical possession is what breaks these markets. Central banks are printing currency at unprecedented rates. Debt levels globally are unpayable. Inflation is persistent, despite official claims otherwise. In this environment, hard assets with actual physical scarcity become incredibly valuable. Silver combines monetary properties with industrial necessity. It's both a hedge against currency debasement and a bet on technological progress. That dual nature makes it uniquely positioned for the current economic environment. Gold protects wealth, silver protects wealth and participates in economic growth. The shortage amplifies both aspects because scarcity drives monetary premium, while industrial necessity drives fundamental demand. Consider what happens as this shortage becomes mainstream knowledge. Right now, maybe 5% of investors understand the silver supply deficit. What happens when it's 20%? 50%? The rush into physical silver would be unlike anything commodity markets have ever seen. The market is too small to absorb massive capital inflows without extreme price dislocations. Early movers will secure silver at prices that, in retrospect, will seem like gifts. Late movers will pay prices that seem insane today but will be justified by the fundamental shortage. The solar manufacturer I mentioned at the beginning eventually found their silver, but they paid 40% more than they'd budgeted, and they had to sign long-term contracts at elevated prices to secure future supply. Their competitors faced the same situation. Across industries, companies are quietly accepting higher silver costs because they have no choice. That cost gets passed through supply chains, built into product prices, and ultimately reflected in inflation. But more importantly, it signals that industrial users are willing to pay significantly higher prices for silver because alternative options do not exist. When industrial users compete with investors for limited supply and neither side can back down, prices go vertical. The hidden silver shortage isn't a conspiracy theory. It's math. It's physics. It's economics. Production numbers are public. Demand growth is measurable. The deficit is undeniable for anyone willing to look at the data. The shortage is hidden only because mainstream financial media focuses on stocks, bonds, and cryptocurrencies while ignoring unglamorous industrial metals. But ignorance doesn't change reality. Silver is disappearing from available supply faster than it can be replaced. Industries absolutely need silver to function. Investors are beginning to understand the opportunity. And the collision between infinite demand and finite supply has only one possible outcome: prices that will shock the world and reward those who recognize the shortage before the crowd.